Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar, since posting a bearish outside range day, has been slightly choppy since it's reached its objective of 77 cents. Nevertheless, the resistant level at 78.35.45 is holding, and this potentially is shaping up to a bearish pattern in terms of a pennant, or most probably a flag, but nevertheless I'd say more to a pennant, and therefore could see another test to the downside. As widely expected, the RBA kept its interest rates on hold, and therefore the market is now looking possibly for a further down test due to the technical implications, and therefore looking to 77 cents and maybe to where the 60-day moving average, which is around 76, 78 or 84. A break beneath there would give further scope to the downside and bringing the target around 75.80. Looking at the euro, the market has headed further as the dollar index, which measures the greenback strength against a basket of 6 major currencies, pushes through the 91 handle. It is assessed that this week the US job report, or the non-farm payrolls, is anticipated to be a little bit bigger than maybe the forecast, and therefore has strengthened the dollar somewhat, and therefore bringing the euro, which is weighted at 57.6, the market is heavily pressured towards its target of 119, somewhere between figure and 119.60. Still, from the two rejections of 121.80, 85, or close to around there, the market has held to a negative response, and therefore the motion is in a bias to the downside as the indicators break down. Dollar yen, well, there is bullish divergence, and the market is still holding to a somewhat steady rise. Nevertheless, I believe the market may find an ambush from 107 and therefore could see a downturn back to 106, reassess from there because we could be looking at 105. The pound is slowly trekking lower after the rejection of 142 figure 45, with the focus seen at 138.30.40. With the technical implications in place to support a bearish case, let's see if we get the grand challenge, and if a breach, would see a move to 135.60. This in turn will see some of the sterling crosses break down, especially looking to sterling yen, with the trend line seen somewhere around 146. Technically, we are breaking down, so I am in favor of this cross to eventually reach its objective, as I say, around 146, and reassess from there. Well, as you can see, the gold outlook has maintained to a bearish case since the break of 1,760 and still looking towards its broader picture, which is seen around 1,680 to 95, and reassess from there. If we don't find or don't appear to get a bullish response from this level, then 1,610 to 30 is the next objective underneath this level of 1,680. Finishing off with oil, well, the market has finally slid lower, or fell to more to a point close to this objective around $58, and I feel underneath there could see a bit more slippage to 57 and reassess. Everything is set up technically, so I feel the market will remain bearish since this doji was in place close to a doji star. And that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the rest of the day.